The crypto counts.
Welcome to the Crypto Council. I'm Marcus. Today we're taking the time for a truly deep dive. We're not just looking at the bare XRP numbers. We're examining the entire market mechanics and a theory that is gaining more and more traction in the current macro environment. Why gold's price action could be the hidden starting gun for the next massive crypto boom. Before we get into the details, a brief note. What you see here is my digital avatar, created using state-of-the-art AI technology. But don't be fooled. Behind this project are real people who have filtered every chart movement and every data point from the underlying sources and reports for you. We use this technology to present the facts to you precisely and professionally. If you appreciate this well-founded approach, please leave a like. Share your thoughts on the current market phase in the comments. We read everything. And subscribing helps us enormously to continue producing these complex analyses for you. Let's get to the heart of the matter. Let's look at the current situation with XRP. If you only look superficially at the chart, you see a tedious sideways movement. But the data beneath the surface tells a different story. We are technically in a classic accumulation phase. On the Heatmaps, a liquidity hotspot stands out at approximately $1.38. This area is literally glowing. If you look at the monthly time frame, you can even see a massive pocket of liquidity in the $1.30 range. In market theory, we know that such zones often act like magnets. The price tends to pick up these levels again to generate liquidity before a true, sustainable trend reversal can be initiated. A central pillar of our discussion today is the risk-to-reward ratio. XRP is currently trading significantly below the key level of $1.74. As long as we are in this range and do not see a clear five-wave impulsive structure to the upside, the movement remains corrective from a technical standpoint. Many experienced market participants are now watching the dumb money indicator. In the past, this has reliably signaled market tops when the masses became euphoric. Currently, however, we are more in the buy warning zone or even in the accumulation zone. This means that the risk of a massive crash is statistically lower than the chance of a breakout, provided you have the necessary patience. Let's talk about Wyckoff Theory. What we are currently seeing could be a Wyckoff accumulation. This is a process where large market participants build their positions unnoticed while the price drifts sideways and retail investors lose patience. This process often ends with what is known as a spring, a final quick sell-off or flush-out. The goal is to shake the last weak hands out of the market by briefly breaking through key support levels. If XRP takes this path and perhaps even tests the psychological mark of $1, this would not be a sign of weakness from the perspective of market structure, but rather the necessary cleanup before the next big impulse. But why are we so optimistic about long-term development? This is where macro rotation comes in. Historically, there is a fascinating parallel between gold, Bitcoin, and high-liquidity altcoins like XRP. In times of global uncertainty, capital first flows into gold. We've seen that in recent months. However, once profits in the gold market are realized, investors look for the next high-liquidity risk-on asset. This was a decisive catalyst back in 2020 and 2021. We are currently observing signs that this capital is beginning to rotate into the crypto market. When this rotation gains momentum and XRP completes its accumulation, Elliott waves come into play. The theory states that the longer and deeper the correction and subsequent accumulation last, the more powerful the following impulsive wave will be. If XRP breaks through resistance sustainably, the first mathematical targets are around $5. However, if this is, as many suspect, the beginning of a major third wave, we could see prices of $12 or even $13. In conclusion, I want to emphasize, all of this is data-based analysis of market conditions and not promises. The crypto market is and remains highly speculative. Never put all your savings into the market. Avoid excessive leverage and consistently use stop-loss orders. In this game, it's not the fastest who wins, but the one who can read the data and has the discipline to wait for the right signals. Thank you for diving so deep with me today. Join the discussion. Do you believe in the final flush-out, or are we already seeing the bottom? I look forward to your comments. See you next time at the Crypto Council.